Let's talk about Fibonacci time. This is something that I think a lot of people look for tutorials on, how they can use it. It's an interesting tool that has a lot of applications. So I like to use it in terms of measuring like cycle lengths, things like that. You can use them with harmonics as well. Some people use it with Elliott wave. Just depends on your level of comfort, I guess, on other types of analysis. So this is going to be fairly broad, fairly basic, but I'm going to show you guys like right now. So here is the low from our previous cycle in 2015. There's our 20K all-time high, and here is our cycle low. And what you will notice is that when we turn on the 1-to-1, which I have off right now, that is our all-time high. So the length of our prior cycle from low to high and the length of this cycle from low to high were identical. A lot of people have made comments about how they thought the cycles were different and that this one was different than all the others, and that, whatever excuses they came up with. Definitely not the case, unfortunately. So it looks like everything was par for the course. Just like this right here was almost exactly the same length as previous. So if we go to the daily chart, for instance, in this case, and I'll get rid of this guy. I know you guys don't want to be staring at that the whole time, but if we measured from the move from 1.2K down to this cycle low before going to 20K, we need to know how long did that take. Right here, right? And you can see the distribution on it. Now let's project that same distribution off the 20K high. So we now have 3 points. We're pulling from here to the low to the high. And what you'll notice is that it almost caught the low exactly. There's your 1-to-1 on January 31st, but the 88.6% did catch the December 15th low. So is the 88% level something you should watch on the Fibonacci time indicator? No. You can if you want, I guess, but the only reason I have it up there is to show you that it came in slightly quicker, 11.4%. Not that big of a difference, so fairly similar. If we were to do something similar with the 3K low and this move here, so we need to see how fast we're currently falling compared to the last time. So we'll go ahead and pull from our 20K high to low, right, like this, and we'll turn around and now project it off of the all-time high. So we'll take a look at that real quick, like so. And I'll turn on the trend line so you guys can see it. And there you are. You can see that we're at the 618 right now, and that these other, I use the .133, .25, .382, .5. The reason I do is it blocks it off so that I know where I'm at in time. And you can see that we've gotten this local peak here, local peak here, local peak here, and we've now got the low at the 618. So we're at the 618%. 61.8% in terms of time distribution. Let's see how far we are in price. Is this any different than the last time? So we know that we are 74.4% down right now, and that the same conversion, we'll just put that right back on here where we look at this. Let's look and see how far down were we coming into the 61.8%. It did front run it a little bit, so we'll say right here. And even if you didn't want to front run it, you could say right here, right? And it's 70%. 70.19%. So yeah, the moves are pretty similar. Does that mean it has to go down from here? Well, no. I mean, this could be a low. We could have bottomed out quicker with less drawdown than we did before. That is something people are postulating, and in trading anything can happen. But things do often rhyme. So if there is going to be a move down, as what I tell people that are calling for 10 to 12K, I guess, those people, when they tell me we're going to 10 and 12K, I say absolutely can happen. Anything can happen. We can't ever say that it won't. If it does happen, though, to me, it's going to take more time. We've got rallies to trade before then. And maybe one of these rallies doesn't have to do what it did in 2018, where it bottoms out and goes sideways and then dumps another 50% or whatever it was. Maybe this is the low. It's a macro pivot. Could be. We have to take each individual trading opportunity and take it for just that. They're all unique opportunities. So for me, this was a good place to start looking for a long. If you've watched me on Debate Crypto or Jeb, I've said we're looking for bottoming patterns between June 20th and July 14th for me. And that was using a multitude of different Fibonacci times from the local area to say that this is when we'd be looking to put in a bottom. And if you look here, right here on June 18th, so if we just look from the 20th, be here on over, we have put in our bottoming pattern, or at least a local low. That was the idea behind it. So if we're going to see further drawdown, in my opinion, it's probably going to be later in the year still. So if this isn't the low, which it could be, we're likely to see, you know, bottoming price action, and it looks like Q4 of this year would be the most probable time frame. Sometime between, I would say, September and November. You know, that's a broad range, and I know nobody wants to hear that, but yeah, Q4 of next year. If this is the low, though, it came in quicker than normal, but again, that's part of life, guys. We're not here to have a crystal ball and have everything has to be the same all the time. We knew that this was a pivot point in the market, so we should be looking to shift our bias from looking for shorting opportunities, looking for some long opportunities. How long will those long opportunities last is the question. But yeah, that's one way you can use this tool. Another way that I used it was to find this low. So if we were to look at this in terms of harmonics, which you could do, this was a harmonic that we identified, and this was one you could have traded, right? Now, how do you trade this? Is you distribute the time of this pattern, so how long it took, we then take it and we push it out and we say, all right, well, what does it look like if we extrapolate the timeline it took for this, you know, I guess, and I would almost call it accumulation pattern, but it's really not. It's gone from accumulation to distribution. We're distributing this pattern over time in the future. And for me, I then use that to determine when I'm looking for, you know, pivots. And so is it going to tell me what if it's going to be a low or a high at that pivot? No. But, you know, when we get to the 0.5 here and we're at macro resistance, which we were back testing a range, one would say we've got Fibonacci time. We're at a macro pivot. Well, we start looking for reversals. Same for right here. This was actually a really big one. There was a Gartley here, something that we were also looking for, and we were looking for it on this date because Fibonacci time told us to. And there you go. That was the date we were looking for, and also the price. So, you know, you can start distributing this stuff and getting to this point. So, you know, we'll get out of log scale for this. But if you're in linear, I like to use a pitchfork with these. It's also a tool that's based on time and price. And again, so we're looking for the 1-to-1. We're coming into macro support, which for us was actually outlined at 25,100 based on prior range data, based on some other tools that we use in the Discord. And you've got this almost to the day at the low. And this is a 28% move, you know. So it was pretty nice. It was very easy to trade. I shouldn't say it was easy to trade, but it gives you an idea of when to be looking for things. It's not going to give you a crystal ball, but it is going to add like that little extra layer of confluence to things. And some people may use this differently, and that's fine, because there's lots of different ways to use these tools. So, you know, if someone uses it differently, that's okay. You know, it's to each their own. You have to kind of cater to whatever skill set you have, especially if like maybe someone says you got to use this with Elliott Wave, but you don't know Elliott Wave. You can go try to learn it if you'd like, but it's not something that, you know, you should feel like you have to do to have any kind of success with it. You know, I mean, this tool can be used many different ways. So do having some basic understanding of, you know, market structure, other tools is necessary. Like you can't trade off of this alone, but, you know, you can make informed decisions because of it. So another way to use it is with the halvings, right? So we have halving cycles that are caked into Bitcoin. You could go back and distribute the halvings. We could say that these are our halvings, boom, boom, and boom, and that we have had 3 of them, and we may have a 4th one obviously here soon. We just don't know where it's going to be, but these are the halvings as of right now. 1319, 1402 days, and if we took the average, 1361, right? So we'll just say it's the average. But you know, if we looked at halving 1 and we actually just measured from the beginning of the halving to the end, back to the beginning, right? That's all we're doing. And let's see where the price is at. We show close to the 618 being the bottom, right? That's about when you start getting your bottom in. Let's look at halving 2 right here, and 618 right near the bottom. Halving 3, which we don't have the data on because, again, the halving is not an exact date in the future. It is something that happens with the hash rate. I think, you know, like the more competitive it is, the faster it may happen, like depending on how fast the blocks are mined. So if we did the same thing where we just measure the length of this projection, it's just the average of these last two, so this could be way off base, but it comes in pretty nice on what you were looking at previously, right? 382 is the all-time high, 618 is where you'd be looking for the low, and that shows that it would be in September, potentially, sometime in that area. Could this happen quicker though? Yes. So again, that's why I say you got to evaluate things uniquely, because maybe all of the, you know, recession FUD and the scare of the Fed pivoting on the rate hikes and the war in Russia is all scaring everyone. So we, you know, found a bottom faster. We capitulated quicker, maybe. It's very possible. So, you know, you have to take this stuff with a grain of salt, but it is useful. It does help you plan. So we know that if we do get those doomsday numbers for lower prices, more than likely they will come later in the year. That doesn't mean you can just run around saying that, oh, we're going to 10K, but it's going to happen in November, on November 7th in 2022 at 4 p.m. That's not what you're looking to do here. But, you know, nor can you say that you're guaranteed to get those numbers ever. This could be a bottom. You never know. So you do have to take it with a grain of salt there. If we were to look back at the previous one, though, again, the halving is something that I really like because it's just so easy to look at. But you can see the 382 is your all-time high, so about 38% of the way into these new cycles after the supply shock. That is the amount of time it takes to really get to that new high. I think it came in even quicker on this one, if I recall. Yeah, the 382 was after the all-time high, which is one of the only time that's been the case. So, you know, take that with a grain of salt, but the low came in pretty close to the 618. So, yeah, I mean, just kind of a neat tool, guys. Hopefully you enjoyed the tutorial, just an introduction to it. If you guys have any comments, suggestions, anything like that, all you gotta do is comment down below. I always appreciate it. Don't forget to like, subscribe, and yeah, I'll catch you guys in the next video.